Down payment on a home. I can't even get a mortgage, or can I? So in this video, I wanted to address two main things: mortgage. What an average mortgage family, median household family can afford, and two, down payment. What kind of skin in the game you would need. So for an average household income of $75,000, okay, Canadian household income of $75,000, you can get into a home. Okay, it is possible. Of course, it depends on certain variables, but it is possible. Obviously, in Toronto versus Windsor, the spectrum of affordability per square foot is completely different. All right, so we have to take that into consideration. The good news is the average homeowner will move 4 or 5 times, upsizing throughout their lifetime, and then, ultimately downsizing into retirement. Okay, so it is possible to actually attain your house, your home, and then move upsize back into Toronto. So it is a natural course of action. So for the average income of $75,000, we ran the numbers, and you're looking at a price point of around $350,000 price point for your mortgage. In addition to whatever down payment added on to $350,000 would be the purchase price that you would be going after. You might be thinking $350,000, like, well, what's that going to get me? But there are places outside the Toronto area that you can get, and I have an upcoming video with my video partner, one of my video realtor partners, and they'll be able to give you some more information as to some places that you can pursue with a game plan to moving back into the Toronto area. So take a look at that upcoming video. What am I talking about when I talk about the average household, the average income earner of $75,000 can actually get into a home, but there are some other things out there that you need to consider. Well, what I'm talking about is your liabilities and your monthly expenses, right? That's one of the things that you'd have to take into consideration. So with that being said, budgeting is actually an essential part of carrying home ownership, and is equally as important as income. Okay, so let's take into consideration a small budget scenario. Let's say you're renting in Toronto or in just around that area, and it's costing you about $2,000. Then you have your car loan, gas, maintenance, groceries, and so forth, costing you about another $1,500. Let's throw some credit cards in there that you pay off at $500 every month towards, based on the things, other various things that you're paying off on their credit cards. Okay. Altogether, you're looking at about $4,000 in this scenario. Okay. With the average income of $75,000, you have an extra $600 set aside in this scenario. Hopefully, you're using that for saving, but perhaps there's some other random things that you may not know you're spending it on, and hence the reason for budgeting. It's amazing what you can actually find when you do get that budgeting scenario going for yourself. Truly, you may be able to determine that it's definitely worth it to pull that money out of the things that, or allocate those funds to somewhere that's more important to you. You must understand, or you must see here where I'm going with it. At the end of the day, the budgeting actually is directly proportionate to your down payment, or accessing your down payment. This brings me to sources of down payment. So what kind of sources can we get? Sources of down payment can we have out there? Well, one could be gifting. It can be gifted from a family member. Will, it could be a will. You can get down payment from a will. You can win the lottery, go lottery, and or finally, you just gotta do what our parents did and our grandparents did, which is just save for yourself. Set some money aside, invest it, and let it grow. And that could be a source of down payment for yourself. So down payment is usually measured as a percentage of the purchase price. Out the upcoming video for how we actually save for the down payment in this scenario. Okay, as we previously stated in the scenario, we ran the numbers for the price point of $350,000, and that can work for an average household of $75,000. Considering your liabilities are low, expenses are paid on time, maintaining a good credit standing, right? and you can put a 5% skin in the game, right? Meaning a down payment of 5%, which translates to a dollar amount of $17,500 down. For the sake of simplicity, closing costs and property taxes are not included in this video, but check out my upcoming videos for some more clarity on these costs. So look, folks, in closing, you may be lower than the median income. Your savings might be less than what we stated here today. You may need to repair your credit or reduce your liabilities. But at the end of the day, with some consultation and some work, some hard work, but it's work nonetheless, we can definitely get you in a position to own your own home. I hope this video was enlightening, and if there's something in this video that you're seriously considering pursuing or achieving, feel free to reach out to me. Thanks for watching, and keep improving. Bye now.